I've been thinking about something for a few days here, and I just wanted to share what conclusion I'd come to because I think this is actually going to solve one of the biggest problems Bitcoin has had, at least since I've been in it. It's been a struggle for Bitcoiners to help people get over the idea of unit bias. What is unit bias? Unit bias is when someone who's new to investing or new to, no, they don't really know what they're doing, but they want to get into something, believes that buying 200 of something is better than buying one of something, right? So for example, that's why shitcoins did really well, because somebody could say, hey, I can buy 10,000 tokens of Solana and I can only buy zero point zero 0.04 of a Bitcoin, right? It also compounds when people don't realize that they can buy, that they believe at least that you have to buy Bitcoin in whole chunks, right? You have to buy one Bitcoin at a time. They don't know that Bitcoin can be divided by 100 million parts. And so because they don't know this creates a unit bias because it's like, well, if I think that I must put together $35,000 in order to buy a Bitcoin, well then I can buy one Bitcoin. I can spend that $35,000 and get 10,000 tokens of this or 10,000 shares of this or et cetera, right? So that unit bias is very, very important, and it certainly damages retail because if you don't understand the asset that you're buying, then more always looks better. So I understand why unit bias exists, but I've just realized as I've been thinking about it that there's one challenge that everyone's been trying to, you've got the Bitcoin versus Sats debate and all this other stuff. All of this is going to be put to bed as soon as the ETF comes out. The ETF is going to fix unit bias faster than any Bitcoiner that you've ever seen talk about Bitcoin fix unit bias. Why? Because and by the way, this should excite you. Of course, if you're a $10 a month DCA gang member, a doom and gloom boomer, etc., nothing's gonna excite you. So I'm not talking to you. I'm talking to people that understand how markets work. Because if one of the ways, like for example, if Apple, the share price is getting too high, one of the ways that they get more capital, suck more capital into it, is by doing something called a stock split. This is completely normal, right? The difference is that on day one share is looking like it's worth $1,000, and on day two, one share is now looking like it's worth $100, right? And so what this does is that it brings people that couldn't afford the $1,000, which is real with the stock market, into Apple stock because they can now buy $100. But what's happened is those people that owned one share at $1,000 have now look into their account and they see 10 shares. So that's a stock split. They still have the same dollar value of stock, but the amount of shares that have been issued goes up, which allows the per share price to come down and allows people with $100 to get into the market. Whereas with Bitcoin, this is quite exciting because somebody who is sitting out on the outside going, hey, I can't get together $35,000 to buy one Bitcoin. As soon as the ETF is live, they're now paying, one share will be, for example, GBTC. What's GBTC at today? GBTC is at $29.22. There's a lot of people that don't understand Bitcoin that they can buy a $30 of Bitcoin, but they definitely understand that they can buy $30 of one share of GBTC, and it's in their broker account and everything's done for them. So this is extremely normal in the stock market, but I hadn't really put together what impact this would have on Bitcoin. And also the fact that people are now, motivated to get into Bitcoin because the companies themselves can debate with each other and argue with each other and compete with each other to get the per share value of their fund to the lowest point possible to bring in the most amount of people, right? So for example, like one share of GBTC is now $29 something, right? You can buy 100 shares of GBTC, right? But most people don't realize that's almost buying a tenth of a Bitcoin, right? But people don't realize that. But you can buy 100 shares of it, and you look in your account and you have 100 shares of GBTC, and you see the performance of that. So in order to get to one full Bitcoin. I think it's just over 1,100 shares you need to get to one full Bitcoin, right? So imagine what happens when you can log into your brokerage account, your Robinhood account, whatever it is, and you see Bitcoin trading for $3.50 a share. Right? So now you're sitting there with $500 going, hey, I can get into Bitcoin. It's $3.50 a share. So this is, let's say you got $1,000 that you want to allocate, right? Before you didn't think that you could, one Bitcoin is $35,000, but now I can buy 285 shares or whatever it is of Bitcoin. And I can start getting my ROI, because most people care about the fiat ROI that they're getting on the investment until we get to a later stage of Bitcoin's adoption. So while I think it's important to educate people on the importance of getting like the Bitcoin in their possession, we have to face the reality too. The reality is most investments are not bearer instruments. So all of these tools and tactics that markets have developed over 100 years are going to be applied to Bitcoin to get as much capital into it as possible. Why? Because of the outperformance of the asset. The further the asset outperforms, the further you want people to put money into it, because they'll be happy with you, right? Somebody who's put $1,000 into the BlackRock fund because they can see it at $3.50 a share or whatever it is going to be extremely happy when that $3.50 is sitting at $12.50 a share, right? They're going to be extremely happy. So as an asset manager, I want to drag as much capital in, suck as much capital into that fund. So I'm going to utilize all of these tactics. I'm going to do stock splits. I'm going to incentivize people to get into the shares as much as possible. Not only institutional, but retail too. As we saw with GME and all the meme stocks, retail can move something as well. And if you're an asset manager, you want to make sure that you can attract institutional capital and retail capital. Institutions don't care about the share price because there's no unit bias amongst institutions. They understand. But retail doesn't understand this. Retail is the one that's affected by the unit bias the most. And so, just imagine what happens when people get in their broker account and they can buy Bitcoin for $3.50 a share. They don't have to understand what's going on in the back end. All they know is I have $1,000 and I can bet on Bitcoin with it. And the beautiful thing about a spot Bitcoin ETF is they put that $1,000 in, BlackRock sends an instruction to Coinbase, and Coinbase has to actually buy that $1,000 of Bitcoin in the market. Whereas that person was never going to do it because it had a unit bias attached to the fact that Bitcoin's $35,000. So there's no way I can get one because I only have $1,000. They don't take the time and the understanding to actually do that research, which is where you and I have the advantage, because we're here understanding that there is no unit bias with Bitcoin, because I can buy, a $30 of Bitcoin, or I can buy $1,000 of Bitcoin, or I can buy $35,000 of one Bitcoin. Or Bitcoin can be split into 100 million parts. And so, that's really the purpose of doing this video. While it's going to destroy this unit bias argument for a lot of retail, this is also an opportunity for you and I, because you and I need to realize that the unit bias argument will be destroyed. More retail will be coming into the market. And it also makes me question, the validity of certain Bitcoin businesses now. Because yes, that education process has to happen in Bitcoin, but it's already happened in the stock market, right? Education is the biggest investment a business will make. And so if you've already got a market that's fully educated and I can buy 100 shares, right? That's where they'll go to, because that's where they feel more comfortable. So this is going to be an interesting scenario to see what happens over here. And by the way, this is before players like BlackRock, who are masters at the market, realize that they can compete with players like Grayscale for the retail audience by just issuing stock splits to reduce the unit price of each share past whatever their competitor's doing, right? So Grayscale might come in right now, which is a 1 at 1,000, right? So BlackRock might say, we'll do 1 in 10,000, right? And suddenly they can start competing with each other, right? They can start competing with each other on the share price and moving the share price around and attracting more capital, etc., etc. Some people will say, I put this on Twitter, and some people said, hey, people are stupid. Maybe, right? Maybe, but this is how the market works. I think saying that, people are stupid is quite arrogant. At the end of the day, this is how the market works, and the masters of the market are now involved with figuring out how to manipulate enough capital, not even enough, as much capital as humanly possible into Bitcoin. And that's what you're about to face. So as I was thinking about this, I was like, we spent hours talking about unit bias, helping people understand this. The second the ETF is trading, unit bias argument is dead. The unit bias argument is dead. There is no more conversation needed for retail when it comes to unit bias. Now, you can argue that yes, you want to continue educating people in order to make them get possession of Bitcoin. But I'm talking about price going up. So if you're sitting there going, hey, do I get into this asset or not? Understand, this is another reason. Unit bias gets destroyed, which means retail can now finally speculate without any limitations. So this is absolutely huge. If you're sitting there going, hey, I'm going to wait until the ETF comes out, you're going to miss out on a lot of the gain here. Now, the other thing I want you to do is subscribe to this channel, because tomorrow I'm going to release a video explaining what I think is going to happen to the Bitcoin price upon the ETF approval. So I want you to subscribe to the channel because and check out that video when it comes out. I think that's going to be extremely important. I think I have a different opinion to what a lot of people do. I'm still putting my thoughts together. As soon as it's formulated, I'll record the video, and tomorrow the video will be live. So please subscribe to the channel in order to make sure that you don't miss that, and also to help me spank the YouTube algorithm, because the faster you subscribe, the speed of subscriptions is important. So please share the video, get people that you know to subscribe as well, because the faster they do it, the faster the YouTube algorithm gets spanked and puts the Bitcoin information out in front of other people before the ETF comes out, and hopefully we can help more people get to one Bitcoin. But despite all of that, despite the unit bias doing more work for Bitcoin, the ETF doing more work for Bitcoin adoption than any Bitcoiner you know, there are still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy.